Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Iovance Biotherapeutics.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. We're examining a company that is focused entirely on a highly innovative, frankly, a pretty radical approach in oncology.
Tumor-infiltrating lymphocyte therapies, right?
TILs?
Exactly. TIL therapies for solid tumors.
And that's what makes this so interesting. They aren't just a player in the game. It feels like they almost invented this entire segment.
That's a great way to put it. They have this huge first-mover advantage. They are the first and really the only company to advance this specific kind of autologous TIL therapy so far.
All the way into late-stage clinical development and regulatory review.
Right. And to just unpack that autologous part, it means they're taking a patient's own immune cells, engineering them outside the body, and then putting them back in to fight the cancer. Sounds incredibly complex.
Oh, it is. And that complexity is their competitive moat. Their manufacturing is proprietary. It's very hard to replicate. This isn't some off-the-shelf pill.
It's personalized biological engineering.
Precisely. And that leads us to their lead product, lifileucel, which is, well, it's poised to potentially become the very first FDA-approved TIL therapy.
Specifically for metastatic melanoma.
A market with a huge unmet need. A first-in-class approval there is. It's a massive, market-defining entry point.
But these revolutionary therapies, they're notoriously expensive to make, which brings us to the financials. Do the numbers actually show they can scale this thing?
That's the key question, isn't it? On one hand, yes, they're showing some really accelerated commercial traction.
I saw their Q3 2025 revenue was $12.3 million.
And the number behind the number is that growth rate, a 128% increase year over year. That's a clear sign of exponential demand.
128% is a head turner, for sure. But, $12.3 million is still a fairly small quarterly revenue for a company trying to do all this.
It is, but you have to view it in the context of their improving efficiency.
Okay.
Their gross margin jumped significantly. It's up to 78% in Q3 2025 from 72% the year before.
So that suggests their scaling efforts are actually working. They're getting a handle on the manufacturing.
It does. A 78% gross margin for this kind of complex personalized therapy is, it's remarkable.
It signals they might get to profitability faster than people think once lifileucel hits.
Look, you're right to bring up the context. While revenue and margins are heading in the right direction, the company still reported a net loss of $91.3 million in Q3.
Which is substantial, but that's the cost of building the machine, right? It's R&D, it's the commercial ramp-up for Emtagvi and Proleukin.
Absolutely. You have to spend that money to lay the groundwork for a huge launch like lifileucel. It's the cost of entry.
And that high burn rate leads us right to the balance sheet, which, is what keeps the lights on.
And for investors worried about cash burn, this is the source of relief. They are holding $324.7 million in cash and equivalents.
And this is the crucial part for me. They have absolutely zero long-term debt.
Right. That cash pile buys them a lot of time, probably well into 2027 at their current burn rate.
So they're not going into this critical period desperate for cash.
Exactly. And that financial strength lets the entire investment thesis pivot away from solvency and focus completely on the huge regulatory event that's coming up.
Okay, let's go there. Because this is the core tension point for the whole company, right? Everything hinges on the immediate future. What is happening in February 2026?
February 2026 is the main event. It's the PDUFA date for lifileucel.
The date the FDA has to give its decision, yes or no?
Yes or no. It is the definition of a binary event.
So a yes. A positive FDA approval would trigger a massive stock re-rating. We're talking huge upside, complete validation of their entire tech platform.
It would. And it would attract a flood of new institutional investment that's just sitting on the sidelines right now, waiting.
But because these therapies are so complex, we have to talk about the risk. A no decision.
A no represents a substantial risk. I mean, it could lead to a massive, sharp decline in the stock price. The FDA always scrutinizes manufacturing consistency and long-term durability with these advanced therapies.
What's at high stakes? The central risk factor investors have to weigh right now.
It is. And it's not just the PDUFA date either. February is also when we get the Q4 and full year 2025 earnings report.
Right. So if they get the approval, the focus immediately pivots to commercial execution.
Immediately. The market will be scrutinizing the sales ramp, For Amtagvi, the integration of Proleukin,
Yeah.
any sign the commercial machine is struggling could really temper the excitement from an approval.
Okay, so let's pivot to the market itself. With this huge event coming up, what are the signals telling us? Is sentiment bullish?
Overwhelmingly bullish,
Mhm.
which, often fuels a move ahead of these big catalysts.
I saw some of the analyst notes. Significant upward revisions.
Yeah, Barclays recently raised their price target from $4 to $9.
Wow, that's a huge jump.
And that's not an outlier. Other firms have strong targets, some reaching as high as $17.
And what about the insiders, the people who know the most? Are they selling?
That's the thing. We're seeing a lack of selling. The Form 4 filings show no significant insider sales, and some executives have actually held or increased their positions recently.
That's a powerful signal. It shows internal confidence.
It is, and that confidence is being mirrored by the smart money. Institutional ownership increased by 12% over the last quarter.
So big funds are accumulating shares.
They are. You see names like BlackRock, Vanguard. They're betting on a positive outcome here.
And from a technical perspective, the chart looks supportive too. The stock's trading around 250, but it's been in a clear bullish trend for 6 months.
All the key momentum indicators, the moving averages, the MACD, they're all signaling positive momentum.
So the projected trading range for the next 3 months is already stretching toward that $4 mark.
It suggests there's room for upside even before the decision if positive news keeps flowing in. The combination of strong institutional flow and positive technicals, it creates a powerful setup.
All right, so let's look past February. Let's assume they get the approval. What's the long-term thesis here? I've been hearing a lot of market chatter.
A lot of chatter. The biggest rumor, of course, is M&A, a potential acquisition.
A buyout. Makes sense. A big pharma company looking to buy its way into the cutting edge of cell therapy.
Exactly. An FDA approval would make Iovance an instant target. But beyond that, we have to ask, what's the internal long-term growth driver?
It has to be the pipeline, right? Expanding beyond melanoma.
It's all about the pipeline. We're looking at other solid tumor indications. The big one to watch is cervical cancer.
And when do we get data on that?
Pivotal trials should read out in 2026 and 2027. Success there would prove the broad applicability of the whole TIL platform.
That it's not a one-trick pony.
Precisely. We're also hearing buzz about partnerships, maybe licensing deals for Europe and Asia.
Which they'd almost have to do. Commercializing this globally on their own would be a huge challenge.
It would. A global agreement would be crucial. It validates the platform and provides the cash and logistics to scale internationally.
So to sort of sum it up, you have this really solid short-term binary catalyst in February that's backed by a strong balance sheet and growth. And then you combine that with a long-term story of pipeline expansion and a clear competitive advantage.
That's it. They are positioned as the definitive market leader in this cutting-edge field of TIL therapy.
But for anyone focused on the next quarter, it all comes down to execution.
Both regulatory success in February and then showing they can scale commercially in that Q4 report.
It's a compelling story. Pay close attention to that PDUFA date and the upcoming institutional ownership filings in January.
If you found this discussion insightful and want to stay ahead of the curve on market movers and catalysts, please remember to subscribe and like our show.
We'll be here tomorrow with another analysis. See you then.